Hello, today is Friday, the 23rd of January 2009, and the market's closed. We did finish with a slight gain here. The NASDAQ was up 14 cents, or about a half a percent. For the week, it lost about 2.2%, and we're down a little bit more than 8% year to date, in spite of that big first three or so days of rallying that we saw in here. So the market, unfortunately, didn't make it back above that 50-day moving average. Would have been nice to see it close above there to finish out the week. But this level 29 and a half continues to be an important area where if somehow the market can leap back up above there, then perhaps we're going to get a little bit further strength. But for now, you really can't trust these rallies. Continue to just day trade them, and that's where there's still plenty of opportunity on the 30-minute time frame. We're seeing this 5-day moving average rather kind of start to turn higher and flatten out a little bit. So just real choppy action. This 29. Probably 29.50, 29.60 is really the key level for the market. The downtrend line has been broken that we saw yesterday, that we got above it briefly, but this morning obviously we gapped lower, and the buyers came in right away. In fact, if you look at the 1-minute time frame, you can see it pretty much leapt a little bit of consolidation, got above that level, and then held pretty much above that rising VWAP for almost the full day here. It was just a few pokes below it intraday, but we did see strength. The advancers were 1669 to 1384 decliners today, so a little bit of improvement there. But still, looking at this 10-minute time frame, it's just a choppy mess, just back and forth action. Again, I think this 2960 is going to be the key level for this market to get past. Breaking a trend line, again, doesn't mean that the trend has changed. It just means that the rate of change has slowed down. So it doesn't mean that we've made a bottom or anything like that. You look at the weekly time frame, it's trying to hold on in here, but obviously we're still in a bear market, so it's very difficult to trust any strength until we can clear some of these more important levels of recent resistance, in particular, again, that $29.60 level. Commodities had a big day. Oil, we've been looking kind of for a reason to buy oil, and I had said that getting above 31 would really be the key for this market. I thought that that's where it might make sense to make a purchase. We are firmly back above that 5-day moving average now. You can see that move above that level came with some volume, and we saw lower volume as this market's consolidated, not only above the 31 level, but above this 32 area that was prior resistance in here. So it looks like maybe we're setting up for another rally in here, and you want to keep for some further rallying in here, similar to maybe what we saw back in here where we saw this big rally. So you want to look at oil with a long bias for the short term right now, but of course keep in mind that we are in a primary downtrend still. That hasn't been changed and won't change for quite some time. Perhaps we're going to head back up towards this 50-day moving average near about 36.5 or so. That would obviously make for a very nice trade. So if you're long in there, your job now is to manage risk and look at the higher lows that this market is making. I'm not sure that I would put my stop right below here initially. Maybe give it a little bit more room down towards this level, but oil is clearly starting to show some strength. Last time we looked at gold was late last year, and what I was saying right back in here was it looked like the market was going to maybe back off and form a right shoulder to complement what looks like an inverted head and shoulders here. Well, you can see the gold came down right to that rising 50-day moving average, and that's where it's bounced from. It's just broken this neckline as well. So really it's looking like and it did so in big volume. If we look at the weekly time frame, you can see that this downtrend line here is broken, and what it looks like right now is if we take the height of this pattern and try and measure fairly conservatively, let's just call this 85 and 70 down here. We could take 15 points, add that to the breakout point at 85, and it looks like an objective, bullish objective for gold might be up near $100 here on the GLD. So, gold is looking bullish. I'm not going to cover it each and every day, but manage risk in there, and it looks like this market is turning higher once again. The buyers are back in control. look at it bullishly, obviously. The Russell 2000 was up 0.5% with its 22-cent gain. The daily chart continues to look like a big mess in here. We did see that that the lows held, and let's just take a look at the 30-minute time frame. We can see that these lows held. We opened, just below the lows from the week. But again, same thing in this market that we saw immediately. Buyers came in. They defended price action at the daily VWAP on these first two pullbacks, and then subsequent strength as well. Here on a 10-minute time frame, going back about 12 days, you can see this downtrend line still acting as a level of resistance for this market. We see a little bit more clearly when we take a look off of this 30-minute time frame. In here, we've got, again, very important, what's been an important level for this market up near 46. So even if we get a rally up from here, we still have to look at this 46 level as an important area where the market's going to have to get above that for any rally to sustain itself, and that's approximately where we see that declining 50-day moving average at this point too. So there remains a lot of risk in here. These triple leveraged funds give you plenty of opportunity intraday to get involved in the rallies and in the declines. So I think that's what I continue to focus on is the just the day trading aspect of it. The financials were up 29 cents or 3.3%. They're still on the week down 7% and 28% year to date. So we're seeing some green candles in here, but don't look at that as any proof of a bottom, because a couple days of just sideways action doesn't mean that we're bottoming in here. We are seeing a little bit more constructive action on the shorter term time frames, but we still can't trust this, obviously. The downtrend line broke in here as well, and once again I'll say that breaking the trend line doesn't mean that the trend has reversed. It just means that the sellers are kind of taking a little bit slower in here for now, and what we really need to see is this market take out some resistance levels. We did close above the 5-day moving average, which we've been watching, but it's still that 5-day moving average is still declining. What we need to see here for financials is, I think maybe moving above this 940 or so, that maybe we can get a little bit more strength. But where is this market likely to encounter resistance if it does begin to rally? We've got all these prior levels of support that did act as resistance. Support here acting as resistance there. This support acting as resistance. Now this support did act as resistance there, and now will it once again? If it can break past here, then these other levels become the areas where we would expect further supply to be released to the market as people who had purchased in here, look to basically break even. So no signs at all of a bottom in financials. We're seeing a little bit of stability, that's all. But when you've got the primary trend lower like this, these pauses within a downtrend will often resume back in the direction of the primary trend, which obviously is lower. We are past a lot of the earnings for the bank stocks, so maybe we're going to see a slowdown to all the bad news in here, and people will have their confidence rebuilt, and maybe some rallies can sustain themselves a little bit further. But there remains a ton of risk, not only in the financials but all this market. So got to keep those trades short term. The S&P 500 still below, obviously, the 10, 20, 50-day moving averages, and the more important level of resistance, 85.5 to 86 level. We can see that most clearly again here on this. We're looking right now at a 60-minute time frame with that 5-day moving average. The 5-day moving average is flattening out a bit. Today we saw same thing as the other markets. We gapped lower down to here. It did hold above the prior lows at about 80.5 or so, and we saw the same buyers coming in immediately. They pushed it below the VWAP slightly, but the direction of the VWAP was still higher. And generally, when the direction of the VWAP is higher, you generally want to give the advantage to the buyers for that period of time that you're looking at. Here's a trend line we've been looking at that the market's been battling with. Obviously, again, breaking the trend line doesn't mean it's going to continue higher, but this is the more important level here short term. I think at about 84.20 or so, getting back above there where we've seen this market gap down to here. I found resistance once, twice, 3 times. Now maybe the next time is going to be the one where we push higher. If the market can hold, I think support maybe around 81.70. Or even this low would be better to see if it could hold that, and then make another attempt to push up through that level. Then the big level, obviously, where there will be a larger battle fought for control here, I think, is this $86 level. Next week, we still have a lot of earnings reports from individual companies, so that's going to keep the risks high as far as overnight trading positions. So got to just take it slow in here till we get a better idea of where this market wants to really go.